that the Niagara region is situated on treaty land. This land is steeped in the rich history of the First Nations, such as the Haudenosaunee, the Haudenosaunee, and the Anishinaabe, including Mississaugas of the Credit First Nation. There are many First Nations, Métis, and Inuit people from across Turtle Island that live and work in the Niagara today. The Regional Municipality of Niagara Police Service Board stands with all the Indigenous people, past and present, in promoting the wise stewardship of the lands on which we live. At this point in time, I will call for a roll call of the board members. Member Eek.
Here.
Member Gayle.
I'm here.
Member Gibson.
I'm here.
Member Lawson.
Present.
Member Steele. Chair Steele.
Here. Yep, here.
And I know Member McKendrick has another commitment and won't be able to join us today. So at this time, I'll call for members if they have any pecuniary interests that they wish to declare at this point in time. Seeing none, we'll move to the next item on the agenda. There's adoption of the minutes. There are no minutes to be adopted, so we'll move, and there's no presentation, so we'll move into new business. First item on the agenda is 5.1, the NRPS Police Service Board Reserve Fund Continuity Schedule for the year ending December 31st, 2021. This is an information report to be received. Can I have a mover and a seconder? Am I still live?
Henry, you're live. Yes, you pick anybody.
Okay. I was going to say my screens are frozen. Bob, you're the only one moving, so you're going to be moving the motion.
And everybody else put their hands up.
I'll second it for you, Henry.
Okay, and Chair Steele seconds it. Yeah, nobody's Chair Steele's moving now, but I can't tell. So you have to speak up if you're going to want to speak, or if you want to move a motion, because my screen's frozen with your pictures. Everyone's smiling, so they're good pictures, but unfortunately they're not moving for me right now. So with this being on the floor, I'll ask the service through Deputy Chief 40, is there any comments that the service would like to make at this time?
Yeah, mute.
Thank you, Member Gibson. Yeah, thank you, Chair D'Angela. The Manager of Finance, Laura Rulo, has joined us in the meeting. And if I may, I'd like to turn it over to her to provide some comments.
Oh, excellent. Thank you.
So good morning and through to the chair. I thought I'd just provide for you some highlights to this particular schedule that I think proves informational for you as the board members. So just to start, under the procurement bylaw 384/2019, that's our finance bylaw, section 6.3.19 requires the service to report on the status of our reserve fund balances to the board at least once a year. So this is why this report is brought forward to you today. I'd like to ask you to turn to the appendix, which is on page 5. And it really illustrates the flows through for each of the reserve funds. So for a visual, at least you can follow the numbers that I'll be quoting. So we have 8 reserve funds with a total year-end balance of $10,479,709. That figure is summarized in the last column of the table. And I really want to begin by discussing 3 fund accounts which are classified as future employee benefit obligation funds. Those funds are the accumulated sick leave fund, which is found on line 1, the future benefit liabilities fund, which is on line 3 of the table, and the WSIB liability reserve fund on line 4 of the table. Now, as noted in the body of the report, 8.8 million or 84% of the total year-end balance are held within these 3 funds. The accumulated sick leave fund, this represents the unused sick leave for members in the accumulated sick leave program, which was grandfathered in 1990. This reserve fund represents approximately 1/3 of the total liability. The remaining 2/3 of the liability is budgeted within our operating budget. And this liability and the fund, it's going to decrease over time as our members retire and receive their payouts, which we anticipate will end about 2026. The two other remaining funds, the future benefit liabilities and the WSIB, that they fall within the region's reserve policy. And what I wanted to highlight is that we're actually required to hold reserve funds at 40% of the total employee future benefit liability. As at December 31st, 2021, the liability that's reported on our balance sheet totals 59.5 million, of which only 13.2% of that liability is funded with these two reserve funds. So technically, we would classify them as being underfunded. This is obviously well below the 40% target set by the region. The only other two reserve funds that I really wanted to draw some attention to is the capital budgeting reserve funds. And those are the vehicle and equipment replacement funds on line 2 and the capital levy fund on line 6. Now, these reserve funds receive their funding from the operating budget as transfers to reserves. So for example, in column 4 of the table, those are the contributions from the 2021 operating budget. And just to reiterate once again, the majority of financing for our capital projects are really funded from our operating budget. So the capital projects that you approved for 2021, they're then deducted from this reserve fund. So that's summarized in column 6. And what I really wanted to highlight was that you can see that we really don't carry a significant balance within these two funds. The capital levy fund has to have a minimum balance of 200,000 in reserve. So with such low balances in these funds, the service is really unable to react to any urgent capital requirements that may arise in the year. And so as you're aware, in the 2022 capital budget, I really focused on the need to increase our contributions to the capital reserve funds to ensure that we can not only finance the replacement of our existing assets, but also ensure that we have funds to mitigate any urgent needs that may arise in the year. I do have notes on the contingency reserves. So those are on lines 5 and 7. And I'll just comment that the region's reserve policy suggests that we hold 10 to 15% of the gross expenditure budget in our contingency reserves. The board office contingency reserve is currently at approximately 25% of their total gross budget. And you're going to see in the next report that the 2021 board office had a surplus of 130,000 this year. That is going to be used to offset the service deficit. So we did request to the region treasurer to transfer this surplus into the board contingency fund. However, it was denied, and the treasurer cited that the fund's balance exceeded the recommended balance threshold. So the service contingency reserve fund is below also the suggested target of 10%. If we followed the suggested amount, the fund balance would actually be somewhere around $16 million. Our strategy, I don't think, is really to achieve that level, as it really appears to be significant for our service contingency needs. But I really want to stress that I think that we should strive for at least a 1% target and then perhaps reevaluate. So 1% target would be around 1.6 million. At our current contribution rate, every year in our budget, we're contributing 250,000 towards our contingency, and it has a current balance of 954,332. So in order for us to reach that 1.6 million, it will be somewhere around 2025 when we do achieve that. I should mention that the last reserve that is the OPVTA, that's the Ontario Police Video Training Alliance. This reserve fund supports specific programs and purchases of the OPVTA. At year end, finance reconciles the activity of the OPVTA, and any surplus and deficit is transferred to this fund account to offset any future unbudgeted expenditures or mitigate any deficits. So you're going to see in the next report that we're requesting a transfer of $4,477 of the surplus from 2021 to this reserve account. That's all the comments I wanted to make. If there are any questions, I'll be happy to answer.
Thanks, Ms. Rulo. That was an excellent highlights of the reserve continuity. Is there any questions from the members? You'll just, again, my screen is all gone blank, so hands won't work for me. But if you do, just speak, just say your name and then you can speak and then ask the question.
Hey, Henry, it's Kevin.
Go ahead, Kevin.
Okay, thank you. So I'm not any knowledge on accounting or anything like that. So I look at this and it shows that there's a 40% set by the region, and this is to Laura, which we're way below. Have we had discussions with the region? Because as it is, we battle the budget every year anyways, and yet we're still, many, hundreds of thousands of dollars low in our reserves as set by them. So have we had conversations with them, Laura?
Yeah, their policy is a guideline, and I did want to mention that they are revisiting their policy. And so I'm kind of waiting for them to maybe revisit those targets. But I think what's important, so they are aware that we're underfunded, and we do have discussions with them. But they are looking at updating their reserve policy. So at this point, they may decide that, the 40% is too high of a target and they would reduce it. But I think what's really important to understand is that most public sector organizations actually fund their employee future benefits. So that 59.5 million, they fund it at 100%. And I think it's municipalities that have the option to not fund it completely. So 40%, from my sort of previous background seems pretty low. But municipalities do have a pass where they don't have to fund it 100%. So I don't know if I'm going to anticipate that they are going to lower it. And as far as a strategy for us going forward, once they do reevaluate that, I think we need to have some conversations about how do we get to that target.
Okay, yeah, it seems like quite a dilemma because it's a fairly high number, and yet at region we're having always a tough sell trying to get the percentage increase through as it is. So yeah, all right, interesting. Thank you very much.
Laura, if I could just follow up on that, will you be having discussions with them as they're developing their policy from the service standpoint and what some of the targets should be?
Absolutely. They actually reached out to me this year about wanting to have a conversation about the police reserves. So yeah, we do have a good relationship and dialogue. I don't know whether they're going to let us, kind of comment on that target. I think there's a lot of background to that target that they have to consider from an accounting perspective as well as from a financing perspective. So, but we do have a good relationship with them, and they do ask for feedback from me.
Excellent. So at least they're aware of our situation. Is there any further questions to the report?
I have a question.
Go ahead, Member Lawson.
Thank you. So I'm just wondering, actually, it's more of a comment for Ms. Rulo. Is it possible to add 2 more columns to this particular appendix? One that says what the region's recommended guideline is, so that we would have the dollar value on there and the underfunded amount. So it would be easier for us to take a look at, so that when we're having these conversations about the budget in the future, it's all in one spot and we're not having to kind of revisit in this manner. It would just be a little more clear.
Absolutely. Yep. I can
Thank you.
Excellent suggestion. Any further questions or comments?
You have member Eek.
Seeing none, I'm going to call.
No, you have Henry, you have member Eek, but he was muted.
Okay.
Oh, okay, go ahead. Go ahead,
Thank you,
Member
Henry. With respect to the discussion around reserve levels, perhaps Laura can answer for me. I believe that all our future liabilities are budgeted for 100% from the existing liabilities that we currently have. So it's a bit of a moot point, although we don't necessarily reach the reserve level that the region would like. Is that a correct statement that I've indicated, Laura?
It's a complicated answer.
Oh.
Yes. The liability, the future employee benefit liability that we're talking about is the post-retirement benefits that we offer to our existing members. And so under accounting guidelines, we actually have to have the present value of that benefit in on our balance sheet. And so this 59.5 million, that is what is the present value cost of providing the retirement benefits for every existing employee that is currently working. And as a result of that, we have to have we have to set that up as a liability under our accounting guidelines. And like I said, most organizations will then have an asset to offset that, but municipalities don't have to fully fund. With respect to our budget, we do have some expenses within the budget to cover some of our retirement costs, but if you add it all up, it doesn't fully fund that liability. So I hope I explained that.
If just a follow-up, Laura, is it what you're saying is you're taking a total accumulation and trying to pay for it in one lump sum, where in good budgetary fashion, we can do it year by year and over time, and not to put ourselves in a poor position, because I don't want the public to think that we're not budgeting suitably and have the funds necessary to meet our obligations.
And you are correct. Municipalities have a pass with respect to 2 items that they don't have to budget. And this is very tough for accountants. They don't have to budget for amortization expense, and they don't have to budget for this employee future benefit expense. So there's a little bit of the board's responsibility under the budget. Our employee future benefit expense is not really part of our budget, but from an accounting perspective, we are required to have to record it. And so this is what, it's a bit of we are funding it through our operating budget, but there are 2 kind of different requirements that we are, that this falls under.
I thank you very much for that answer.
Okay, any further questions or comments?
I do, Henry. Bob.
Bob. Go ahead, Member Gayle.
Thank you. So I'm just going to try and talk lightly on what Kevin said, Mayor Gibson said on the reserve funds and the region, and that we brought up a discussion, or I brought up a discussion of how the region had a $30 million surplus. They put it into the reserve taxpayer relief fund. Yet we also asked as a board that with our capital budget, that this be funded by the region through those reserves, because you don't have to pay it back. And that's for the police cars, etc. And I know that meeting, I don't think Chair Steele or I could be at, and it was turned down, or it never went anywhere with it. I'm concerned with the cooperation. This is me talking, not this board. I'm concerned with the cooperation of the region and councillors with regards to the police budget every year on funding our reserves and funding other things, as we're looked at as the biggest funder from the region, which we are. And we're tied down so much by the contracts of labor and things like this. I hope it changes. And I'm speaking out on this now more so because this is my last year here, and I've seen it all along, that every time it's a battle at the region. Yet they had $30 million in reserves they put to their taxpayer relief fund. And this is the time we could build up our reserves, or they should have put money towards our budget. So I hope that the region, in the spirit of cooperation, or whatever words you want to use, will fund some of these things on the police that will come back to bite us in years when it's very short, especially when a taxpayer relief fund is exactly what it says at the region. And this is relief for the police and for things that we have to have. So I've spoken enough about that one, but on it, my point of asking a question here is the vehicle reserve fund, through you, Chair D'Angela, to Laura and to Acting Chief Forty. We know that the price of vehicles and everything has gone up. Vehicles, especially with the chips. Talking to a car dealer that lives right near me, said that you can't get every new car for the next 6 months is bought up. Vehicles are up $5,000 to $10,000. Elite vehicles are up $15,000. So I'm asking through you, Chair, to Acting Chief Forty, are you monitoring this and rethinking new vehicles and that, as opposed to repairs? And I'm talking about vehicles, computers, anything that we need parts for. I know we're not in the lumber industry, but everybody is rethinking what they're buying now. Even though we might have budgeted for it a year ago, it might be better to invest into repairs and then replace the fleet, because we will be hitting these reserves according to the budget before. So I'll look for a response for that, please.
Thank you, Member Gayle. I'll turn it over to Laura to provide her insights.
Through to the chair, I'm wondering if Richard Frayne, Superintendent Frayne, is on as well. And he oversees fleet. I don't want to put him on the spot, but I know that there has been some communications even from the purchasing groups about the difficulty in getting vehicles for 2022.
Yep.
I know that I have shared that information with the inspector over at Fleet, and I don't know if Superintendent Frayne has further to provide. I can't see him on my screen, so.
Yes, I'm here. Through the chair, yes, thank you. We are kind of alert to the issue. And I actually just read this morning now that GM and some others have halted production right now with everything that's going on. So we are struggling to do our replacements. So we are extending the life cycle of vehicles currently as it is now. So we're on to it for sure.
Yeah, I expected that, Chair, through you on that answer, but I'm just reiterating it on everything we buy, be it weapons, be it everything. I imagine things have gone through the roof. And if we can get by a year, then I bring this up because we will be hitting our reserve funds on these items. There's no way around it. So I've said enough. Thank you very much.
Okay, thank you, Member Gayle. Any further questions or comments? Okay, seeing none, I'm just going to ask for everyone if they're agreeable to the recommendation to be received. Just say yes or yay.
Yes.
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 Kevin is yes.
Everybody's yes.
Okay, so yeah, everyone's yes, so that's great. So the motion passes. So we'll move to the next item on the agenda, which is 5.2. This is the NRPS and the Police Service Board Financial Variance Overview for the year ending December 31st, 2001. The recommendation of the report is subject to the approval of the Region Municipality of Niagara Council of the Consolidated Regional Year-End Transfer Report. The Niagara Regional Police Service Board approves a transfer of $4,477 to the OPV TA Reserve Fund, resulting from a small surplus in the current year operations. Could I have a mover and a seconder? You could just speak up too.
Dave Eek moves.
Kevin will second it.
Thank you, members. I will turn to the acting Chief Forty if there's any comments from the service staff on the report.
Thank you, Chair D'Angela. I'll turn it over to our Manager of Finance, Laura Rouleau.
Thank you. And through to the chair. So this report is our final 2021 variance report. And I just wanted to note that we hold a finance committee meeting in February because we're required to report our position to the region by next week so that they can prepare for their corporate services committee meeting on March 9th. This is one of the reasons why we typically have a February finance committee. What I'd like to really highlight and start talking about is the COVID costs that the service incurred as a result of the pandemic and restrictions. And so I'd like to ask you to turn to page 9, where with to Appendix 2 of the report. And so we've been reporting COVID in this schedule format all year, and it should be noted that there was a portion of COVID costs shown that we've been reporting at the top of the schedule that's really funded by our operating budget. So these are the costs that are associated to permanent staff on admin leave because of absences due to isolation periods or until the member tests positive. So these salary and benefits for our permanent staff, they're budgeted within our operating budget. So the cost of $874,518, we wanted to report it as part of the overall gross COVID costs. However, you're going to hear me talk about incremental costs. These costs are really not classified as incremental because we were able to cover it within our operating budget. So as I speak about incremental costs, I just want to make sure that everyone understands it's really unbudgeted costs or costs that are really not within our operating budget. So the remainder of this, the costs that we have outlined is really summarizing our incremental costs that we've incurred as a result of the pandemic and the restrictions. And the incremental costs for 2021 totaled $3,684,554. And you'll see in number 2 that there are personnel costs that we reported as incremental. And these are the costs associated to staff that were called in to replace members who were off due to COVID. We also incurred about $241,409 in supply costs. Mainly these were the purchases of our PPE supplies. And we did a lot of deep cleaning services, or we purchased products to help with deep cleaning. Mainly to decontaminate our vehicles and work areas. But our most significant cost really that's been related to COVID, it's been the revenue loss from the casino closures for the 2021. It's recorded at $2,994,250. And as you all know, the casinos were closed from Jan 1 to about July 26, 2021. And then when they did open, they opened obviously to less than full capacities. And as you see, we did receive funding for the remaining amount from the city of Niagara Falls, and I'll explain that a bit later. The remaining lost revenue of $153,437 that's reported in as 4B, that's related to fees for records that are related to services such as background checks that have been lower than pre-pandemic levels. So overall, we incurred incremental costs due to COVID of $3,684,554. And I really want to note that the region has transferred to the service budget additional funds to cover all of the incremental costs associated with COVID. So when we talk about, I'm going to move on to talk about the actual deficit. I just wanted to make sure everyone understands that the region actually flowed an additional $3,684,554 to our statement to offset all the COVID costs. I'm going to move on, but I didn't know if anybody had any specific questions related to COVID.
Members, is there any questions? Just speak up.
Yeah, I have a question, Henry. Kevin?
Go ahead, Member Gibson.
Thank you, Chair, and to Lauren. So that money that the region is flowing to us, in theory, is simply money that they are receiving from the province. Therefore, that's not, well, it's all taxpayer money, but it's not directly from Niagara taxpayers. Is that correct?
Yes, that's correct. Yes. They actually received Safe Restart money last year. What year are we in? 20, and they received it in 2020. And then they put it into their taxpayer relief reserve fund, and they've been using that to help offset 2020 costs. So yes, you are correct.
Okay, good. I just thought the public would like to know that the Niagara region people aren't funding all of that. It's spread out right across the province of Ontario. Thank you.
Okay, Ms. Laura, Ms. Cerullo, I don't see any further questions at this time. So if you want to continue.
Okay, so I want to direct you back to page 2 of the report. There's a little table there. And this table really summarizes our year-end position. And so, like I mentioned, the region covered all the incremental COVID costs. So really, this table outlines our year-end position for normal operations exclusive of COVID. The service ended with a deficit of $429,302, which was offset by a surplus from the board office for an overall net deficit of $299,228. The region has is going to be offsetting this net deficit against the 2021 surpluses that they're experiencing within other regions' levy departments. So therefore, there was no need for us to have to transfer any funds from our contingency reserve to offset the 2021 deficit. So I just wanted to make it very clear that they will be covering this deficit. The report itself really details various explanations in each of the major expense categories, but I just kind of wanted to summarize the main contributors to the service deficit of $429,302. It's really within two areas, and that was our civilian salaries and our employee benefit costs. So in addition to costs within our civilians that we typically experience, and that's backfilling operationally essential civilian positions in areas like comms, RTOC, and ourselves. Actual civilian salaries also includes a retroactive payment for a multi-incumbent position resulting from an in-year job evaluation review for the special constable positions. So we had a significant retro payout to this multi-incumbent group as a result of a job evaluation. The other main contributor is our employee benefit costs. We are what is called an ASO plan with Green Shield. It's called administrative services only. So what it means is we pay premiums into sort of an account. And then as our members put their claims through, they draw from that account. And so what we experienced this year is that our actual claims experience really exceeded the monthly premiums paid on account. So we had a significant increase in our health benefit costs in 2021. As a result, you saw in the 2022 budget that we had to significantly increase those premium rates so that we didn't have, so that our account would be more in balance with our actual experience. So these two are really the most significant overages that they were offset with savings in our uniform salaries category. And mainly when we have savings in uniform, it's usually because we have lags between replacing in vacant positions, mainly due to retirements. And we also try to mitigate the deficit. You'll recall when we reported our Q3, we knew we were headed into a deficit. So we did freeze some of our discretionary spending mid-year in order to mitigate the deficit impact that was forecasted at that time. The last thing I wanted just to highlight was the mention that the region had agreed with COVID that they would fund all of our casino losses resulting due to their closures. So they had committed that they would cover, the COVID costs at 4.2 million. They were hoping we could have recovered all the other costs. But when we first talked at the beginning of this year, they said they were committed to covering any of the losses. And so, as I mentioned, we did receive some revenue from the casino for the portion that they were open, and that was $1,205,750. So we did have a conversation with the city and with the region, and we all came to a consensus that they would fund us that amount and that the region would offset any differences through COVID. Those are all the things I wanted to highlight, and I'm happy to answer any questions that you might have.
Okay, thank you for the highlights. Is there any questions from the members or comments?
It's Kevin. I have a question.
Go ahead, Member Gibson.
Thank you, Chair. This is on page 5. And I think, well, for myself for sure, but also the public may be curious. Intercompany charges. Can that be explained, please? And who are these intercompany charges? Thank you.
So through to the chair, those are budgeted costs that are managed and services provided by the region. So things like recycling costs. Another big item in intercompany charges is the when we have body work done for our vehicles and it's done by the region, they will charge that directly to our budget. And it all falls into that intercompany charges. You'll see that there's a huge credit in that line, and the other items that comes through that are the flow of money to offset our 911 communications program. So the region funds $1.6 million towards that program, and that's reported in the intercompany charges category. And the other thing that, and you'll see it's quite significant this year, that's where they flowed the COVID budget money to us. So they flowed that all through there. So it turned out to be a bit of a net. It's a credit, but there are expenses related to direct services that we receive from the region. And then that's where they flow any of the credit money that they give us for the 911 program and for COVID.
Okay, good explanation. Thank you very much. That's all I have.
Thanks, member. Any further comments or questions? Okay, I don't see any further comments. I don't see any movement, but am I still on?
Yes.
Oh, thanks, member Lawson. Okay, seeing no further questions or comments, I want to thank staff for putting these two reports together. Did an excellent job, Ms. Rouleau and your team. It was well explained, and I think provides a lot of good information for us. So on that note, I'll call the question. All those in favor, just say yes if you approve.
Yes, Kevin is yes.
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 Okay, it sounds like everyone has said yes, so it's unanimous. The motion carries, and that moves us to the next item on the agenda, which is other new business. Do any of the members have any other new business? Seeing no hands and seeing no comments, I will then move to number 7, which is adjournment. So today's meeting has now concluded, and I want to thank everyone for their participation.
Great, thank you.
And I guess we'll just zoom right back in.
Yes.
Yeah.
Deb mentioned earlier that this meeting concludes, and then we have another scheduled meeting within minutes after this one.
Okay, great. Thank you.
Okay. Just one final note. I do want to commend our director, Ms. Reed. She did an excellent job. They ran a surplus at the board